Welcome back to the deep dive. Today, we are cracking open the actual administrative engine that powers your financial security. We're talking about group accident and sickness insurance.
Right, but not the sales pitch. We're talking about the hidden operational manual, what happens after you enroll.
Exactly. I mean, think about it. You pay into your group plan, but when something actually happens, an illness, an accident navigating the claim can feel, well, like you're trying to solve some kind of bureaucratic riddle. So our mission today is to really synthesize these complex rules. We're looking at claims processing and this pivotal function called coordination of benefits.
Or COB.
COB, right. And we also need to get into the agent's role in all this, especially when you see some of the, frankly, shocking new statistics on disability.
That really is the critical piece, isn't it? I mean, group coverage is fundamental protection for so many people.
Yeah.
But the value of that protection, it's totally dependent on knowing how claims get processed and, crucially, how you can maximize your return if you happen to have dual coverage.
So if you miss a step or you misunderstand a rule like COB,
You could easily be leaving thousands of dollars on the table, money that is legitimately yours. So we want to give you that tactical knowledge today.
okay, let's get into it. The first hurdle, claims administration. This is that multi-step process the insurance company absolutely must follow every time you send in a form.
It's mandatory for them, yes.
Yeah.
You can think of it as a kind of administrative gauntlet. It all starts when the insurer receives that initial notification.
And it has to be on their specific form,
It
right?
has to be on their form, and it needs to come with what the system calls attendant proof.
Attendant proof. Okay, let's translate that out of jargon. That's just your supporting documents, your receipts, the physician's statement, that kind of thing.
Precisely. The paperwork. And once they have that, the machine really starts running. The next couple of steps are just internal checks. First, is the group plan itself still active? And second, are you the person making the claim, a legitimate covered member of that plan?
So far, that seems pretty straightforward. Where does the complexity really start to creep in?
It hits hard in the fourth step, which is eligibility determination. This is where the insurer looks at the actual product or service you're claiming for.
They're asking, is this even covered under the master contract in the first place?
Exactly. And the fine print here can make a huge difference. For example, you might claim a high-cost prescription drug, but the plan might specify it only covers the generic version.
Ah.
So they're checking all those details, the percentages, the deductibles, the annual limits, before they move on to the final stage.
Which is the adjudication, the formal decision phase.
It is. Once they determine it's eligible, the claim gets adjudicated. If it's approved, the insurer makes the payment. That can be a lump sum for, say, a medical procedure or periodic payments if it's a long-term disability claim.
You know, this process involves a lot of back and forth. Communication is key. Does that responsibility change depending on how big the company is?
It absolutely does.
Yeah.
And this is a really important takeaway for anyone listening, depending on where you work. In a large groupthink, big companies with their own HR departments, the communication is usually handled between the insurer's rep and the plan sponsor. The employee just deals with HR.
But that whole dynamic shifts for a small business.
Completely. The sources say that for small groups, let's define that as maybe 25 members or less, the employer doesn't have a dedicated HR team. In that scenario, the agent often gets called on to communicate everything directly to the individual members. So if you work for a small company, your insurance agent is basically your claims liaison. They're the one you lean on.
That's such a vital piece of context. Okay, let's move to the concept that I think confuses almost everyone, but it holds the key to getting the most money back. Coordination of benefits. COB.
Yes. And you only run into this if you are lucky enough to be covered by two active group health plans. The most common case is your own plan and then your spouse's family plan.
And the COB clause, it's not optional, is it?
Not at all. It's a mandatory set of rules in almost all extended health contracts. It dictates which plan pays first, and then, critically, how much the second plan has to pay to fill any remaining gap.
Okay, so let's lay out the basic rules. If I have two plans, how do we know who the first payer is?
Rule number one is simple. The group plan where you are the employee, the primary cardholder, that plan always pays first. That's your primary coverage.
And your spouse's plan, which covers you as a dependent, becomes the secondary payer. It only kicks in if there's a balance left over.
Exactly. Now, here's the technical detail that really separates people who get full reimbursement for those who don't. It's the calculation for the second payer. When you submit the claim to that second carrier, you have to file the entire original expense amount. not just what's left over,
The whole bill.
the whole bill. And the secondary plan then pays the lesser of two amounts. Amount A is what it would have paid if it had been the primary payer,
Okay.
and amount B is just the difference between the total expense and what that first plan already paid.
So that lesser of clause, that's the industry's way of making sure you don't profit from a claim.
Yeah.
You get reimbursed for the full cost, but not a penny more.
That's the mechanism. It ensures you get back 100% of your cost, but it prevents overpayment.
Yeah.
It keeps the whole system financially stable.
Before we jump into our big example, there's one fantastic little detail about TOBs that always gets me: the rule for children's claims.
Oh, yes. This one is so specific. If a child is covered by both parents' plans, the plan of the parent with the earliest birth date in the calendar year pays first.
Not the oldest parent.
No, not the oldest, the one whose birthday comes first. January 1st beats December 31st no matter how old they are. It's purely calendar-based, and it trips people up constantly.
That is a perfect example of these non-intuitive mechanics. Okay, let's make this whole calculation crystal clear for everyone with the example of Jasmine and Abdul's dental claim. This should be a real aha moment.
Let's do it.
Okay, so Jasmine and Abdul are married. They both have group dental plans. Jasmine is the one who needs the dental work. It's a $2,500 job.
So because she's the patient, her plan is automatically the primary payer.
Right, and her plan has a $100 deductible and a $1,500 annual maximum. Abdul's plan, the secondary one, has a $50 deductible and a $2,000 maximum.
And both plans have 100% coinsurance, just to keep the math simple.
Okay, step one. We file the full $2,500 claim with Jasmine's primary plan. What happens?
First, Jasmine is on the hook for her $100 deductible. That leaves $2,400. But her plan's annual maximum payout is only $1,500. So the primary payer reimburses her for $1,500.
So after her plan pays its max, there's still a pretty big gap left from that original $2,500 bill.
A big gap. You take the total expense, $2,500, subtract what her plan paid, $1,500. That leaves a remaining balance of $1,000.
Okay, step two. Now they submit the entire $2,500 bill to Abdul's plan, the secondary payer, and this is where we do that lesser of comparison.
Correct. So we calculate amount A. What would Abdul's plan have paid if it were primary? It would have paid the $2,500 minus its $50 deductible up to its $2,000 max. So amount A is $2,000.
And amount B.
Amount B is simply how much wasn't covered by the first plan. We already know that's the $1,000 gap.
So Abdul's plan pays the lesser of amount A, which is $2,000, or amount B, which is $1,000.
It pays the lesser amount, so it pays $1,000.
And there it is. Jasmine got $1,500 from her plan and another $1,000 from Abdul's plan. That's a full reimbursement of $2,500.
Exactly. Without knowing those COB rules, they would just stopped after her plan paid out, and they would have been stuck with a $1,000 bill.
That math just shows it perfectly. Understanding this stuff isn't academic, it's about real money.
And that example really illustrates why an agent's ongoing service role is so important. They are meant to be the guide through that complex math.
Right, an agent can be passive, just sign you up and collect a commission, or they can be really active in supporting you.
If the agent is active, they really shift from just being a salesperson to being more of a financial partner. The sources say they have a two-pronged responsibility. Stay updated on your needs and rigorously document everything they do.
Let's focus on that proactive service piece first.
Okay, so the agent is supposed to be a conduit, right? They anticipate problems. And the most important time frame here is 90 days.
90 days.
An active agent will contact the client 90 days before the plan's annual renewal date. This gives you time to discuss any changes you need, look at the costs, and, this is crucial, it gives you the option to shop the plan for a better deal.
And the agent should be helping with that, soliciting other quotes.
Yes, they should be getting quotes from other carriers and making recommendations.
Right.
That 90-day window is your moment of leverage. It ensures your coverage stays high quality at the best possible price.
And all of this service has to be underpinned by what you mentioned, meticulous documentation.
Absolutely. The agent has to document every single step. This is for the protection of everyone, the agent, the insurer, and you, the client.
What are we talking about specifically? What gets recorded?
The date of every contact, what was discussed, what action was taken, and the final resolution. And the sources really emphasize that they have to take special care to document any time the client expresses concern or dissatisfaction.
So they should be keeping all the emails, the quotes.
Everything. Written communications, detailed notes from phone calls. That record becomes your evidence trail. It's vital leverage for you if there's ever a claim dispute down the road.
Yeah.
The agent's documentation is basically your insurance policy against administrative error.
That totally reframes the agent's job. It's not just selling, it's diligent record keeping for your long-term protection. Okay, let's shift gears now to the really big picture. The largest potential risk for you as an individual listener, A&S protection beyond the group plan.
Well, the massive risk here is really an ownership problem. For most people, their group benefits, disability, extended health, they're non-convertible.
Meaning what exactly?
It means that unless the benefits can be converted to an individual contract when you leave the job, the coverage is legally owned by your employer.
So if you leave that job.
The coverage terminates. It's gone. You are suddenly exposed. And this creates a huge responsibility for the agent to make sure that you have adequate, individually owned coverage that travels with you no matter where you work.
That seems like the real long-term planning job, and the sources lay out a 5-step process for agents to build that kind of quality program for you.
That's right. First, ascertain your needs, what income and assets need protecting. Second, compare those needs to what you already have. Third is find the right products, whether that's disability income, critical illness, long-term care, and so on. Then fourth is developing clear recommendations and submitting the paperwork. And fifth, and this is a continuous loop, is conferring with you to review all the policy features, the benefits, and maybe most importantly, the limitations and exclusions.
That kind of holistic approach is more crucial now than ever before, especially when you look at the new data on disability rates. We tend to think of long-term disability as something that affects older people, but that risk profile is changing fast. It's staggering. Between 2017 and 2022, the rate of people 15 and over reporting at least one disability jumped from about 22% to 27%. In 5 years, that's almost 1 in 3 people.
And here's the part that is, well, it's frankly alarming. The youth group, ages 15 to 24.
Yes.
That age bracket saw a massive increase. It went from about 13% in 2017 to over 20% in 2022. A fifth of young adults now report having a disability. That is a huge risk factor for anyone just starting their career.
And of course, seniors still have the highest rates, hitting over 40% in 2022. But it's the speed of the change in that youth demographic that shows you can't put this kind of financial planning off anymore.
We also see a consistent gender gap, right?
I do. Women consistently report higher rates of disability than men. In 2022, it was about 30% for women versus 24% for men. So let's tie this all together for you, the listener. We've established the mechanical necessity of that claims process, and we gave you the blueprint for the coordination of benefits calculation, the math that gets you more money back. But we also highlighted that huge long-term protection gap created by non-convertible group coverage.
And if you connect all those threads, the admin details, the agent's role, and this shocking data on rising disability, the conclusion is pretty clear. That proactive annual review of your policy becomes less about paperwork and more about foundational financial defense. That individual coverage, the stuff that travels with you, it's really a non-negotiable part of securing your future.
So here's our final thought for you. We encourage you right now to go track down your group benefits package and look for the word convertibility. Find out if your A&S benefits just disappear if you leave your job. And find your specific COB rules. Finding those answers now will tell you exactly where your personal coverage vulnerabilities might lie. We'll catch you on the next deep dive.